Hello and welcome, Bitmonger family. Hope you're all doing well today. Today's topic is going to be game theory. What is game theory? How does it relate to Bitcoin? And why we are incredibly bullish on Bitcoin going forward. So let's take a look at the concept of what is game theory. So I did a search here in Google, and this is what the AI gave back to me. It says game theory is the study of strategic decision making where the outcomes for each participant depends on the choices of others. It provides a framework for analyzing situations where individuals or entities called players make choices that affect each other's outcomes, and where each player's optimal strategy depends on the actions of the others. So to summarize this, basically it's saying, if your opponent is doing something, you most likely want to be doing it as well. And we can see this happening right now in real time. So let's take a look. How is this in relation to Bitcoin? And first off, we need to look at asset class. So what do we got here? So I wanted to know what was, how long has Bitcoin been around, and how does it relate to other assets? And this is part of the attraction. If you look before Bitcoin, the last truly new asset class was arguably real estate, which became widely recognized centuries ago. Bitcoin, introduced in 2009, is often cited as the first genuinely new asset class in about 150 years. So the gap between these two is roughly 150 years. So this is a new asset class. It has been recognized, and people are going to want to accumulate it. So let's take a look here at this one. Why should we be interested? Well, first of all, we have the world's most powerful nation, the United States, and the president saying Trump's promise to make U.S. world crypto capital to be a reality soon. He's declaring that he wants the United States to become the global crypto capital. This is a big deal, and this is a complete flip from the past administration in which they were actively going out and attacking crypto. Here we have them embracing it, and this has to be recognized. So let's take a look at another aspect. These are countries currently on the record, and I'm sure there's others that are doing it stealthily that aren't reporting what they're doing. Because let's face it, if you're trying to accumulate a scarce asset, you don't necessarily want to be telegraphing it to everybody. You want to be quietly accumulating it while you can, so it doesn't drive the price up. But here we can see these are ones on the record. We got the UAE. They are rumored to have roughly 420,000 Bitcoin. Roughly 444 billion. We got the United States with our holdings of 198,000, roughly 21 billion. China behind them at 20 billion. United Kingdom 61,000, 6 billion. Ukraine 4.9 billion. Bhutan, they've been harnessing their hydroelectric to mine Bitcoin, so they've risen up the ranks. They own 12,000 Bitcoin, 1.2 billion. El Salvador, if you've been following the news, we know El Salvador made a move, was about 4 years back, 5 years back, in which they recognized Bitcoin, and it pissed off the world, what was that watchdog group? It was the IMF, I think it was, that got upset about that. We got North Korea, sketchy bastards, Lazarus Group, Venezuela, and Finland. So we have these countries that are, that we know are holding Bitcoin. But how about this one? So I asked about sovereign wealth funds, and MicroStrategy is a corporation with a huge amount of Bitcoin, and they have been used as a proxy to own Bitcoin. So look at what I found here. I asked how many sovereign wealth funds own MicroStrategy, and it says while there is no definitive list of all sovereign wealth funds owning MicroStrategy, at least one, Norway's Norges Bank Investment Management, is known to hold a significant stake. They own 0.72 stake in MicroStrategy, translates to approximately 514 million worth of shares, or roughly 3,200 Bitcoin. Now, just so you guys know, Norway is one of the richest countries in the world. They sit on massive natural resources, oil, timber, hydroelectric. They are a juggernaut, when it comes to per capita wealth. Their sovereign wealth fund has so much excess money that they have to figure out ways to reinvest it. And they have been accumulating Bitcoin. And they are smart. Let's take a look at this other one here. And this is more proof that we are seeing adoption and game theory start to take place. And I've talked about this one before. This is the bitcointreasuries.net. We can see all of these companies are holding Bitcoin and putting it into their treasuries. So a lot of these corporations, they have, they hold cash. And rather than holding cash, which is a melting ice cube and being debased, they are taking that and they're buying Bitcoin and they're writing it down. Now, they're doing different types of financial jujitsu to try to get a hold of Bitcoin. They're offering bonds, they're, doing these types of things to raise money to then turn around and purchase Bitcoin. MicroStrategy being the most notable and the first one to do this, and all these other companies that we see here are essentially copying the MicroStrategy playbook. Look at this, and I noted this the other day. The number of corporations holding Bitcoin as a treasury asset has nearly doubled in a month, now totaling over 240 firms combined with a combined 3.45 million Bitcoin. If this trend holds, Bitcoin may soon rival gold as the go-to macro hedge. Wow. And it said, what did it say here? 240 firms. What did we see here? What do we got? It says down here, entities is now 251. It's growing, guys. This is growing, and that was just published. This was just published not that long ago, just a few days ago. So it's growing. This is game theory happening. Next thing. So we look at the market cap of gold. Now, Bitcoin's interesting, but a lot of people compare it to gold because it's a commodity, and also because some people see it as a store of value, like as in gold, which is okay. It can also be seen as kind of like a tech stock as well because it is a new technology. But we'll just go with gold. So right now I asked, what's the market cap of gold? And the current market capitalization of gold is estimated to be around 17 to 26 trillion, okay? And I looked at these other things, and everybody here is saying it's roughly, these other ones these articles that I see are saying it's roughly between 22, 23. So let's just call it 21 million for the sake of this. Okay, so it's 21 trillion, and this has been around for ages, and that's only counting the gold that is above ground. Okay, that's not counting all the gold that hasn't been pulled out of the earth, because remember, if we get increasing demand for this, they can pour more gold out, and that can increase the supply. But whereas we compare this to Bitcoin, and let's look at Bitcoin's market cap, and we can see Bitcoin is roughly 2.1 trillion. So it's 1/10 the size of gold. Only 1/10. and we can see it's being adopted massively. And this is the digital age. People are adopting this asset, this new asset, and it is growing. It is growing massively, and it's happening right before your eyes. If you're not paying attention, you need to wake up and start looking at Bitcoin and making your own analysis and determining what you should do. Now, I am not a financial advisor. I'm just a regular guy on the internet. You need to, but you need to be paying attention to this and make your own decisions. Don't make any decisions just based on what I have to say. So, I believe it's got a lot of room to grow. It's only 1/10 the size of the market cap of gold, and therefore, in looking at adoption, it could go crazy. So let's look at some more. This is Larry Fink, and if you don't know who he is, let's read a little bit about Larry Fink. So, Lawrence Douglas Fink is an American billionaire businessman. He is co-founder, chairman, and CEO of BlackRock, an American multinational investment management corporation. BlackRock is the largest money management firm in the world with more than $10 trillion in assets under management. Okay? This guy is a big player, man. He is a powerful mover and shaker, and people, sovereign wealth funds, nation states that are looking to deploy capital consult this type of guy. And high net worth individuals, billionaires, these types of people, they listen to Larry. And let's take a look a little bit more about what Larry has to say here. Where are we? So, BlackRock CEO Larry Fink forecasts $700,000 Bitcoin price amid inflation worries. And we all know about Trump and his tariffs, and we also know about the money printing, and this is going to cause inflation, folks. Let's take a look at what he has to say here. So, the fund sought advice on whether, a sovereign wealth fund was seeking advice from him. And the fund sought advice on whether to allocate 2 or 5% of its investment portfolio to Bitcoin. According to Fink, if institutional adoption continues to grow and similar allocation strategies are embraced broadly, market dynamics could drive Bitcoin to such remarkable heights. Let's take a look and see what he says. There's a video here of him. Let's see what Larry's got to say here.
If you're frightened of your debasement of your currency, or you're frightened of your economic or political stability of your country.
So, if you're frightened of debasement, that's the money printers going on. That's what we've been seeing the last 20 years. Our purchasing power is eroding quickly. They're debasing the currency. And there's also massive political instability happening around the world, as we know. So let's continue.
You can have an internationally based instrument called Bitcoin that will overcome those local fears.
Okay, so internationally based, what he's talking about here is Bitcoin is not linked to any sovereign nation state. It can't be debased. There's only going to be 21 million Bitcoin ever. And most of it's already been mined. And a nice chunk of that, say 4 million, has been lost by the early geeks that threw away their hard drives. Okay? Let's continue.
And so I'm a big believer in the utilization of that as an instrument. And so if that becomes true, and you see that it could be a proper hedge against maybe hope security or equities. Yeah. The question is, could you see a 2 or 5% allocation? I was with a sovereign wealth fund during this week, and that was the conversation. Should we have a 2% allocation? Should we have a 5% allocation? If everybody adopted that conversation, it would be 500,000, 600,000, 700,000.
There you go. And that's what's happening, folks. And this is coming down the pipe. I'm telling you guys, you need to be paying attention. You need to be paying attention. Now, he talked about the debasement. Let's take a look at this. And, you know, what's going on with certain economies and the debt. And because let's face it, when countries are massively in debt, to pay off that debt, they often turn on the money printer and debase more. So let's take a look at look at this. So I asked, what's a healthy public debt to GDP ratio? And it says it's roughly around below 60%. So again, we're looking at public debt to the GDP ratio. What do we got here? This is the U.S. Debt Clock website. This is global. So we're seeing in this column here, we're looking at public debt to GDP ratio. America's at 100%. China's 85, Germany 73, Japan's 291, 92 in India, UK's 113, France is 123, Italy's 160, Brazil's 94. Okay? So we're looking at these massive economies, major players in the global marketplace for goods and services, and they are not in a healthy situation. We can expect the money printers to go on. We can expect probably more debasement happening in the future. So you need to ask yourself. We're seeing game theory happening. We know that we got one of the most scarce assets in the world. There's never going to be more than 21 million Bitcoin. What do you want to be holding? I know what I'm going to be doing. All right, guys. That's game theory. That's Bitcoin. That's why you probably want to be considering buying some. Not financial advice, of course. Monger on.